Hello, my name is Elwin Ng and welcome to Market Apprentice. Now that you've watched the videos on Price Action 101 in the previous sessions, as well as various areas of technical analysis, I believe it is now time to develop yourself towards becoming an intermediate level trader. Before we do that, remember to pat yourself on the back because this is a great achievement. Well done. However, the real meat of trading begins today as we start exploring a little more about price action. In today's video, you'll be learning how to read and use price action in the right context, and hopefully, price action will start to become clearer and more meaningful as you watch the video. With that, do enjoy the session. Previous tasks. Now, before we begin, just a quick reminder, this was the task that I gave you in Price Action 101. You were asked to pick a currency and find examples of each price action. Do you remember this? Have you done this? I hope you have, because that's a fairly important task. With that, just a friendly reminder, do not start today's session until you finish the task in Price Action 101. Because if you do, you will appreciate today's session a lot more, and you will learn much better as a trader. However, if you have, then let's carry on. How to use price action. Remember that price action represents human behavior. Remember the story of how Mom and Dad were debating about prices of Apple? That's right. That represents human behavior. In fact, human reacts to what they see. Right? Technical analysis is useful because traders see what they see and they react accordingly. Hence, price action is most effective when traders see things that are obvious. This represents crowd behavior. Price action is most effective because if everyone is looking at the same thing, everyone will react to it the same way. Hence, it's important to note you should only use price action when price interacts with support and resistance, because support and resistance are what every technical trader is learning at the start of their trading career. Things like horizontal levels and trend lines are the basic fundamental of technical analysis. Of course, there are other types of support resistance that are useful. For example, moving average is a common one, or Fibonacci level, which is another common example. And of course, when price is cycling healthily, that means the crowd or the market is active. And when they are trading actively, that means price will become a self-fulfilling prophecy. Now, you should use price action at the start of a with-trend phase. Remember that the trend is your friend. Lastly, price action is most effective on a larger time frame. Don't get me wrong, they are used on smaller time frames as well. It's just that they're more meaningful on a larger time frame compared to a smaller time frame. Horizontal levels. As you've learned previously, a horizontal level will probably define a range market. So, the chances are high that you will see price ranging like this. And here, when it arrives at a horizontal level, this is where price action becomes useful. For example, you'll see a pin bar here before price cycles down again. And then when it reaches a bottom, you might see an engulfing bar. And this is more relevant than having a pin bar in the middle, for example. And then when price moves upward, you find a twin track here. Again, this is when price is useful. As much as possible, try to avoid price action in the middle of nowhere. So pin bar here or pin bar here is less meaningful compared to when being at horizontal levels. Next, remember how support becomes resistance and vice versa? For example, you might see price cycling here. A pin bar becomes useful when it's on a level. It cycles down, you get another pin bar. From then onwards, it goes up. Here, you will likely get a trend bar, breaking with commitment. And then it comes to retest. So this pin bar here is very useful because it's in line with the O resistance. And you'll probably move up from there. Next, trend lines. Do you remember your price cycle? Price cycling in phase 1 and 2. So this is your with trend phase, your with trend phase, and your pullback phase. Now, price is probably most useful if you see a pin bar here, or a pin bar here. And it's probably less useful if you see a pin bar here, because it's in the middle of the phase. Right, so that's the basic of it. Let's look at some real examples. In front of you is a GBP/Swiss weekly chart. As you can see, price reacted to this level initially. Here, you have a pin bar. This pin bar nicely shows where the horizontal level is. And then, you have a long trend bar. Another pin bar here. As you can see, there's many pin bars here. All these high test bars, but they don't mean much, because as soon as price retested that horizontal level, this low test bar here become extremely effective. From then onwards, price just started to move higher. Next, with a Euro-Aussie dollar. As you can see, price initially moved and we found a pin bar here. Now this high test bar became the foundation of the horizontal level. Remember that we need 2 or more touches before a horizontal level is valid. However, we couldn't have done anything here. Price went down and came up to retest. Do you see a nice evening star here? A trend bar, followed by a small body bar, and it finished off with a little engulfing. That became more meaningful because it retested the high of the previous high test bar. It failed and started moving downwards. Can you see how this low test bar was meaningless? And then it followed by a few trend bars. And price started to consolidate. Again, not much meaning at this moment. Price cycled a little bit more, and this formed another support level. As price moved upwards, it came down to retest that support level. And this becomes more interesting. Can you see how this bar here was an inside bar? This followed by a low test bar, which is also a false break. False break below the inside bar, but closed above the inside bar. From then onwards, price was very aggressive because the bulls were back. From then onwards, smart traders know to take this long only. Next, we have the Euro Kiwi on the daily chart. This high test bar here formed the basis of the horizontal level. Price went down and came up to retest it. Can you see how the body of all these candles remain below that level, and only tails of those candles poked upwards but failed to close above it? This red bar here is actually an inside bar. Again, you see a false break poking above the high test bar but closed below it at the end of the session. From then onwards, the sellers were in control. This high test bar here was a final retest of that level before the confirmation that the bulls had failed. Sellers took control of it all the way down. While in this session, price started to move upwards. Now, can you see how this blue color trend bar went above it? Now, this is interesting because the next one was actually an inside bar. Can you see how the body of the red color bar remained within the blue color bar? There was indecision because the buyers and sellers were still testing this horizontal level. Unfortunately for the sellers, the buyers came in and take control to go up. Now, price came back to retest the level. Can you see how this twin track, a semi-engulfing bar because the blue bar is slightly above the red bar. This beautiful twin track just showed how the bulls took control of the market and price just went up from there onwards. Next, we have the cable on the daily chart. Right, as always, this high here has formed the basis of a horizontal level. As you can see, as price went downwards, all these small body bars were insignificant compared to what was significant on the horizontal level. Price came. However, at that point in time, this horizontal level was meaningless because price actually came back to test it later on. We know it's been tested because there was a low test bar here, and then a high test bar. Not really a high test, but sellers and buyers tested the level before a engulfing bar came in. Now, as price come to retest this level again, you see an inside bar, the red color one. It shows indecision as buyers and sellers had no idea what to do. However, the sellers came in and pushed price lower. Now, the interesting bit of this is that price kept making higher low. It was going higher and higher, even though the top was flat. The confirmation came as soon as price broke above it with conviction. Can you see two continuous bullish trend bar that went above it? Now, price came back to retest this. This is when resistance became support, and this low test bar was a lot more meaningful than whatever you've seen before. This low test bar tested the horizontal level before it went up. Here we have another interesting setup. As price approached to retest this level, can you see a doji bar, which is also an inside bar? A doji inside started the consolidation market. There were lots of indecision around here. Now, the interesting part is, while there is indecision around here, then came a high test pin bar. This is also a consolidation false breakout. The consolidation false breakout showed that the sellers had come in. Even though slow, the sellers managed to push price low. However, the buyers came in to retest the market. Can you see how there is a high test bar? Now, although we didn't get an evening star here, this red bar formed a bearish engulfing bar. The final attempt was an evening star. Can you see the long high test bar here, showing how price pushed above but failed dramatically to hang before it came down. From then onwards, the sellers were in control. Can you see how this seller trend bar was so much longer than the previous bars? That showed that the sellers were convicted and committed to sell the market. From then onwards, the market just went down. Now, here's another cable on the daily chart. In this example, the low test bar here formed the basis of the horizontal support level. As you can see, price went up before it came down to retest the market. Can you see how the blue bar was actually an inside bar? But the real confirmation came as soon as the bullish engulfing bar came in. This sort of looked like a twin track, but it doesn't matter because the engulfing bar pushed the price higher and followed by a second trend bar. The combination of these two low formed a double bottom. Now, from here onwards, price just went higher and higher. Now, this is also an interesting pattern. Can you see the trend line here? And how price was cycling very healthily. With trend, a pullback. With trend, another pullback. And then with trend phase. Do you remember the definition of a trend line? As soon as the trend line has two touches or more, first touch here, a second touch here, the third touch was valid. Now, if you look carefully, as soon as price touched that trend line, the first thing that happened was a low test bar, followed by an inside bar and another inside bar. The last red bar was a doji bar, and that was a confirmation of indecision. The market was really testing a trend line here. However, as you can see, the buyers took control, and it just moved higher and higher from then onwards. Next, another cable on the daily. However, this is a slightly different pattern. While this is a bit more advanced in terms of its horizontal setup, this is going to be a useful basis as you continue to develop yourself further. So do pay attention. As you can see, there was a level here, and price showed a bullish engulfing. While price started to move higher, it moved from a whiff trend into a pullback phase. But can you see how this bullish trend bar, which is also a low test bar, broke that level with conviction? Now, price went higher, sort of retested that level, which was formed on this doji bar here. It retested it and went higher before it did a pullback. Can you see how this low test bar became a beautiful setup? It retested this doji bar here on the dot, followed by inside bars before it went up. This is also a resistance turn support pattern. Now, you would expect another resistance level to happen here because this high here became the basis of this horizontal level. However, can you see how the bullish trend bar just broke the level with conviction? Trend bars are good to show who's taking control and who's the leader. As soon as that happened, market continued higher. Alright, that's it for the examples. Summary. Price action is most effective when they're reacting to support and resistance levels. Remember crowd behavior. The more obvious it is, the more effective it is. Hence, higher time frame works better. Make sure to practice drawing support and resistance levels, trend lines, horizontals, Fibonacci's, and so on and so forth. They are all useful in terms of how price action will react to them. Also, keep practicing price cycle. As I mentioned, you are now about to move towards becoming an intermediate level trader. However, do not forget that your foundation is crucial. This video is to remind you that you should keep practicing your basic technical analysis. Go back to price cycle. Learn phase 1 and 2 all over again. Task. Now, here's a simple task for you. Go back to your price action 101 and repeat the task that was given to you. However, this time round, discuss how price reacted to horizontal levels and trend lines. Discuss how price were meaningless when it was on its own and when it was not interacting with horizontals or trend lines. Just a reminder, this was the previous task given to you. Pick a currency pair and find examples of each price action below. Thank you very much. Thank you very much. You have learned a great deal today, so make sure to start practicing. The more you practice, the better you will become at reading price action. Thank you and see you soon.